Hey, it's Tim Seymour giving you the 4 things I want investors to watch in cannabis as we get into the third and fourth quarters. First of all, for the industry, earnings. We're in the middle of an earnings season. Headstrong and profitability within these companies is the story that really investors should be excited about. 2, M&A. I expect significant M&A and consolidation in the sector, not only as the largest multi-state operators and the Canadian LPs look to get bigger and increase their strategic geographic footprints, but I also think you're going to see those strategics that have been waiting on the sidelines begin to start nibbling some more, and that always has been a very big driver for this industry. 3, technicals, the charts. Look, cannabis companies, despite improving fundamentals, have actually gone through a very difficult technical period. We want to see some of these charts get back above their 200 days. A couple of the leading companies in the market, like a Green Thumb, have actually stayed above that, and their charts look pretty strong. I want to see some of the rest of those stocks actually get above key technical levels. And 4, finally, the macro drumbeat continues to be strong. I mean, the steady drumbeat. So the Seymour bill was a bit of a disappointment for investors. It was also very promising when you think about what could be in store on the federal landscape and the support that you have certainly within the House, but improving within the Senate. But most importantly, the addressable market continues to grow state by state. Each state that has a medical program seems to be advancing it and moving towards rec. Those that don't have a medical program are beginning to go through that ballot process. So lots to watch for a sector that investors know is a high growth sector, have been looking for catalysts, and we think there are many on the horizon. There's 4. Hey, earnings season in cannabis. We've got the Canadian companies who've reported last week. We've got the biggest U.S. companies reporting this week. What are our takeaways, and what do we expect to hear later on in the week? First of all, in Canada, last week what we heard from Tilray is not only is this company, which has always been the most profitable company in cannabis, it continues to get more profitable. The combination of Aphria and Tilray this past quarter showed enormous synergies in terms of the cost reductions, but probably the most interesting we heard north of the border was Irwin Simon, CEO of Tilray, talk about their strategy for growing globally. We continue to think that Tilray and Aphria are going to grow globally, and a story that I think a lot of people may be underestimating where that story can go. Canopy growth is a story where the long-term commitment of Constellation Brands in the Canopy growth story, despite a less profitable story and one that's taking longer to get to that profitability, I think investors should take a lot of comfort in the fact that Constellation Brands is a distribution and branding powerhouse and that they're playing the long game here, and that's why investors should be very focused on this company. As we look to the U.S., Curaleaf reported numbers on Monday night. What did they tell us? They told us sequentially they're still growing at a 15 to 20% clip, year over year 140%. But that actually, as we get into 2022, you're going to have this step-up function in terms of their revenue numbers. And I think that's something you're going to see across the board. GTI reports on Thursday. They're going to tell you about that. Trulieve is also going to tell you about those numbers. And I think for investors that are following the U.S. story and looking at earnings as a catalyst, well, it really is the bottom-up profitability. When we look at the largest MSOs in the U.S. trading anywhere from 8 at the bottom end to 15, 16 times 2022 EBITDA, it makes these companies very cheap to other high-growth CPG sectors, outside of cannabis. And actually, when you consider the growth you're getting in cannabis, this is a pretty exciting time to look at these earnings. So what's ahead in Q4 for cannabis companies? We've talked about the macro, we've talked about the Seymour bill that left some investors disappointed. It left a lot of folks like me, and as an ETF investor, I'm investing for the long term thematically. I think you've got a backdrop where federalization and what that really means to me is bringing in the ability to have these companies have access to the major exchanges, have some of the biggest investors in the world begin to invest. Remember, if you're investing now in cannabis, you're largely in ahead of some of the biggest investors in the world. And I think that's part of the excitement of looking out to where that Seymour bill, which had everything but the kitchen sink in it, is something that will be pared down as we get into, I think, the later parts of the year. We're going to have a better sense of really what's going to come back to the table. In the meantime, state by state, you continue to see cannabis legislative ballot 2022 midterm election initiatives come through, in addition to just following through on initiatives that were already set. I think ultimately it is about M&A. It is about the strategics on the sidelines. It is about a case where investors are taking companies that largely have underperformed for the last couple quarters, despite the fact that their earnings and their profitability have gotten better, as they begin to look and take better levels here on the stocks, I think the market's going to continue to outperform as we get into the second half of the year.